What's up, everybody? This is Ryan Pulis from the Pulis Group with your real estate tax tips. We're a tax and accounting firm specializing in tax planning for real estate investors and small business owners. Today, we're going to talk about real estate professional status. Now, before we dive in, it'll help to cover a little bit of the history. You see, prior to 1986, taxpayers could deduct all of the real estate losses against other sources of income like W-2 earnings or active business income. In 1986, Congress passed Section 469 of the Internal Revenue Code. This is the section of the code that governs passive activity loss rules, which limit a taxpayer's ability to deduct real estate losses and other passive losses against regular income. This new section of the code inadvertently punished people in the real estate businesses. For example, Johnny Lawrence was in the business of doing fix and flips, and he would keep a few properties to hold as rentals. Well, under these new rules, he wasn't allowed to use his rental real estate losses to offset his business income from the sale of inventory. This isn't really fair because other professions didn't have similar limitations. For example, a dentist with 2 offices, one profitable, the second office with a loss. Well, the dentist could still use those losses from the second office to offset the income from the first. So in 1994, Congress addressed this issue and added Section 469C7 to the code, which provides for this real estate professional status. The status allows taxpayers primarily engaged in real estate businesses to deduct all of their rental real estate losses against their active business income. So the passive activity loss rules under Section 469 prevent taxpayers from using passive losses to reduce non-passive income, like W-2 wages and active business income. Passive losses can only reduce passive income. Losses in excess of passive income are generally suspended and carried forward to future tax years to be used against future passive income. Rental activities are considered passive by default, even when you materially participate. This is what's referred to as the per se rule. So what is real estate professional status? Real estate professional status is simply a designation for qualified taxpayers in the eyes of the IRS. Real estate professional status is one of 3 exemptions to the per se real estate rule that by default says rentals are passive activities. So real estate professional status is defined in Section 469C7 of the code. We'll be discussing this in more detail shortly. Just real quick to talk about the other 2, the second exemption from the per se rule is a complete disposition of your rental property or activity. So when you sell your rental, you can deduct all current year passive losses and all suspended passive losses related to that activity. The third exception is what's known as active participation with modified adjusted gross income less than $150,000. So this exception allows taxpayers with a modified adjusted gross income under $150,000 to deduct up to $25,000 against non-passive income. The full $25,000 allowance applies to taxpayers with modified adjusted gross income under $100,000, and it's phased up 50 cents for each dollar over $100,000, completely phasing out at the $150,000 threshold. For example, if your modified adjusted gross income is $110,000, the phase-out amount would be $5,000, so that's 50 cents times the $10,000 over $100K, and the deduction is then limited to $20,000 rather than $25,000. You actively participated in an activity if you own at least 10% and you make management decisions. It's a pretty easy standard to meet. So if you approve new tenants or approve expenses or make similar decisions, you're considered actively participating with that 10% or more ownership. Today, though, our focus is on the real estate professional status. So let's move on and talk more about that. To qualify as a real estate professional, there are 2 hurdles that you must clear. The first hurdle requires that more than 50% of the personal services performed in all trades or businesses are in real property trades or businesses in which you materially participate. The second hurdle you must clear says that More than 750 hours of your time must be spent in real property trades or businesses in which you materially participate. So let's talk about an example. Johnny Lawrence spends 2,000 hours teaching karate at Cobra Kai Karate Studio. He also spends 800 hours working on his rentals during the year. He'll pass the 750-hour test, but not the greater than 50% test. So Johnny's not going to qualify as a real estate professional. In order to pass the greater than 50% test, he'd need to log at least 2,001 hours in his real estate businesses to meet the more than 50%, because he's already working 2,000 hours in the karate studio. That's going to be pretty difficult to do when you're working a full-time job. It's very rare for someone with a full-time W-2 job to qualify as a real estate professional. Though if you're unable to qualify, maybe your spouse can, so you can still take advantage of the benefits. So what hours actually count towards clearing those two hurdles? So not all time is treated equally. Your time spent must have a material impact on the operations, and you must actually be performing services. So it's not as simple as saying, I was watching the contractors as they installed windows, supervising. In that case, you're not actually doing anything. That time's not going to count. So other time that does not count is time spent on education and research hours. Those are not going to qualify. Neither do investor hours, such as studying financial reports. Again, you must be doing something to impact operations. Below is a list of the 11 real property trades or businesses that are listed under Section 469C7C. You have development and redevelopment, that's 2, construction and reconstruction, acquisition, conversion, rental, operation, management, leasing, and brokerage. Brokerage services are going to include real estate sales agents. They do not include mortgage brokers, though. In addition to clearing the two hurdles, the 50% of your time and the greater than 750 hours, you also have to demonstrate material participation in your rental activities in order to deduct your real estate losses. So you can basically say there's 3 tests: the greater than 50% of your time, greater than 750 hours, and material participation. That part is key. Even if you clear the first 2 hurdles, you must also show material participation, or you're not going to be able to deduct those losses. The default position is that you must show material participation for each rental property. This can be difficult if you have multiple properties. However, there's an option to group them. Treasury Regulations 1.469-9G, often referred to as a Gelection, allows you to group all of your rental activities together and treat them as a single activity for purposes of material participation. So let's say you have 10 properties. Rather than showing material participation in each one, which is the default rule, you can make an election to group them together. Now you only have to show material participation in the aggregate. To make the election, you attach a statement to your tax return. There's sample language here on the slide. So let's talk some more about material participation and what that actually means. The regulations define participation, not material participation, but participation as any work done in an activity by an individual who owns an interest in that activity. To materially participate in an activity, the taxpayer has to be involved on a regular, continuous, and substantial basis. So you must be participating in the activity regularly on a continuous and substantial basis. The regulations provide for 7 tests that you can use to demonstrate material participation. The first test requires that you participate more than 500 hours during the year. The second test says your participation represents substantially all participation for the activity for the year. If you're the only person doing repairs, collecting rent, handling leases, etc., you're going to pass this test. The third test requires that you participate more than 100 hours and more than anyone else. This allows others to help you with different things on the property, but you've got to show that you participated more than 100 hours and more than any of those others that are helping you. Test 4 says the activity must be a significant participation activity, and that when combined with all significant participation activities, totals more than 500 participation hours. So a significant participation activity is any trade or business activity in which you participate more than 100 hours during the year, and in which you don't materially participate under any of the other material participation tests listed here, other than this test number 4. The 5th test says you can show material participation by participating the 5th test says you materially participate as long as you have materially participated in 5 of the last 10 tax years, whether or not they're consecutive. So if you had material participation in any 5 of the last 10 years, you're going to pass this test. Test number 6 can be passed by materially participating in a personal service activity for any 3 prior tax years, whether or not consecutive. So any 3 years, if you're doing some sort of personal service activity, generally like a consulting type work, then you have material participation. The final test requires participation of more than 100 hours and based on all the facts and circumstances. That's test number 7. You only need to pass one of the 7 tests to show material participation. The most common tests to demonstrate material participation for real estate professional status are number 2, the substantially all test, and number 3, the 100 hours and more than anyone else tests. You are allowed to include your spouse's time to meet material participation tests. This is unlike clearing the first 2 hurdles, greater than 50% of your time and more than 750 hours. One thing to note, if you're a limited partner, you can only use tests 1, 5, or 6 from the 7 above to show material participation. Just a little side note there on that. So as a recap, real estate professional status allows you to use passive losses to offset your non-passive income. To qualify as a real estate professional, you must clear the 2 personal service hour hurdles for work in real property trades or businesses. That's the greater than 50% of your time and the greater than 750 hours. Both tests must be passed by one taxpayer. You cannot include your spouse's time. In addition to clearing both hurdles, you must demonstrate material participation. This is generally done with the substantially all test, test number 2, or the 100 hours and more than anyone else test. That was test number 3. Your spouse's time is allowed to be counted for material participation. Remember that the default rule is you must show material participation in each reno activity unless you make the election to group them together. You make this election by attaching a statement to your tax return, and then you only show material participation for all activities in the aggregate. That wraps up our discussion today on real estate professional status. I hope this was informative and helpful. Feel free to leave us a comment below, or you can contact us through our webpage at thepulicegroup.com/contact. That's ThePulicegroup.com/contact. We are taking on new clients and review your past returns for planning opportunities. Thanks and have a great day.